If you are entering every time you see a break of structure, you are probably trading BOS the wrong way, because a break of structure doesn't automatically mean the market is going to continue in that direction. The real question is what liquidity was taken before the break and whose liquidity is now trapped. In this video, I'm going to show you how I read break of structure differently using market structure and liquidity to determine whether the break is actually worth trading. So as you can see, we are currently on the daily time frame on XAGUSD. Now, from what you can see on the daily time frame, you can see this obvious break of structure here to the downside. This. Now, why we are choosing this and not this is because if we go to the weekly time frame, for instance, you can see that this was the obvious break of structure, which is this one here. Is the obvious break of structure. Yes. Now, whenever you have a break of structure in the market, the first thing you want to do is to know if the high that caused the break of structure, if it is protected or if it's its liquidity. In this case, you can see that the market swept something from the left, thereby making that place what a liquidity block. You get. Now, if you now go to the daily time frame now, we can now see why we choose this place as what as our break of structure. Now that we have identified that we have a sweep here above this place, the next thing we need to do is to look out for where these sellers, those people that sold from the early sellers, those that sold from here, where they are trapped. And from this place we can see that these early sellers are trapped here. Since they are trapped there, that means we have liquidity resting above this high. Now, if we have liquidity resting above this high, we can clearly see from the downside again that we have what? We have a sweep to the downside, which is this. And we have what? A break of structure to the upside. If this is true again, then since we have a break of structure here, that means what? These people, those that are buying here, the buyers here, those that are buying here are induced. If those that are buying here are induced, where is their liquidity? Now, from this higher time frame, I can easily spot this place here as well as liquidity. So we need to go down to the lower time frame and see if that zone is actually the liquidity. So in this case, I'll move down to my 4-hour time frame, which happens to be my intermediate time frame. So on the 4-hour time frame, we can now reframe things and say that okay, this place that we have as our daily break of structure, we can change it towards old highs in the market that have been taken out. Then we can see clearly here that price has been respecting this zone. Price has been respecting this zone. That means we are trapped around this place. If the market is coming down, the market is not going to respect this zone. So since we know that this place is trapped, we can also see here that the market sweeps something from this point here. And we have what? We have this break of structure to the upside. Therefore, this forms my liquidity block. Now that I have a liquidity block, I now know that this zone is what? Is a protected zone. We get. So since this zone is a protected zone, what I now want to see is that I want this market to trade into this low so that we can continue buying to the upside. Now, if that is the case, we can see that on the 4-hour time frame now here that we have liquidities resting below all these lows. Now the closest ones I can see here is this one here. So I can now spot this as what? As my structural liquidity. If this is my structural liquidity, and I want to go towards my entry confirmation time frame, which is what? The 1-hour time frame. Now the 1-hour time frame, what I want to do here is I just want to refine this my entry zone to this liquidity here, because that is the first early buyers in this chart. Now another thing you can do here is that we can see that we have built trendline liquidity to the upside like this. If this is true, then from the upside we can also see that we have this recent break of structure to the upside. And remember what we said earlier, that whenever we see a break of structure, we want to know if the low or the high that caused that break of structure, if it's a protected low or what, or if that low is liquidity. So in this case, we can see that the market created this low, created a high, came back to retest that low. Therefore, this place is going to be what? Liquidity. If that place is going to be liquidity, then we don't expect this low to do what? To hold price. We can see the same thing happened here. The market created a low, the same thing. So all these places are liquidity. Okay, that means we can trade this market to the downside. Now, before we trade this market to the downside on the 1 hour time frame, at least we want this market to come take out this low first. That is when we know that okay, the market has taken out. The market now wants to reverse. Yes, but let's look at the 15 minutes time frame and see what we have there. So we are currently on the 15 minutes time frame, and on the 15 minutes time frame, we can see that this place we are expecting to be our last low in the market is not actually going to be old lows that was created in the market on the 15 minutes time frame. So this is not going to be what our old low. If this place is our old low, we want to check. Now we can see we have a break of structure here, and we can see that the market broke structure to the upside again, then created a liquidity block. Why did I say the market created a liquidity block? You can see we have a high, a low. The market have taken out that high. Since the market have taken out this high, I cannot deem this high now as what? As a protected what? High. If that high is a protected high, that means that all this place is now going to be what? My liquidity block. If this is going to be my liquidity block, I cannot check now and see that I cannot see now that we have taken this internal structure to the downside. So we have this BOS on the 15 minutes, and I can see that price is respecting this zone. Since price is respecting that zone, I can see that these buyers, the sellers, those that were trying to sell these markets are trapped around this zone. If they are trapped around this zone, then I now have what? A break of structure to the downside, meaning that these sellers are induced and they are trapped here. If these sellers are induced and they are trapped here, where is the liquidity? So just the same process, repeating the same thing. I can see that I have what? Structural liquidity resting above that high. So for me, where do I have structural liquidity? Okay, so for me, I'm actually going to wait for this structural liquidity to be taken out before I enter the trade. Now you can actually enter this trade here when this market took out this low here. You get this one. You get, because this is inside what your liquidity block. But for me, I'm going to wait for this market to come up and take out this low. Sorry, this high. Once the market take out this high, that is where I'm going to enter the market. So I can refine my liquidity block to be like this. But remember, my liquidity block is everything here. Okay, but I just refined it to be like this now because of what I have this structural liquidity resting above the high. So my first trade idea is now going to be to sell from here. How am I going to enter the market? Immediately the market take out this structural liquidity. That is where I'm looking at selling from. So just above this are my stop loss. Then I'm targeting what? First take profit is going to be this old lows here. This one. Then second take profit, if I go to my 1 hour time frame. Second final take profit is going to be this low here. So this is what I'm expecting on Saver. If the market now says to this point, and now this is now when I want to take the rebuys. I hope you learned something from this analysis. I will see you on the next one. Thank you.